This video is going to be a full masterclass. I'm going to be telling you and showing you everything you need to know about making money from the federal government of Nigeria by investing in treasury bills and federal government savings bonds. You may want to grab your notebook and take notes so that you don't miss any key information that can help you to make more money. In case if you're seeing this face for the first time, my name is Anne. I'm a chartered accountant with years of experience in both the banking and insurance sectors, and on this channel I cover all topics money, how you can make better money, how you can save better, and how you can invest profitably so that you can live well, retire comfortably, and enjoy financial freedom. So if that sounds like what you're interested in and what you love to keep seeing, then quickly join this growing community by clicking the subscribe button and turning on your bell notifications so that anytime I drop a video that can be of help to you, you will be notified. In this video, I'll be sharing what treasury bills and federal government savings bonds are, the benefits of investing in them, the disadvantages of investing in them, the differences between the two, step-by-step guide to invest in each of them, mistakes to avoid, and frequently asked questions from beginners. So what are treasury bills and federal government savings bonds? These are simply defined as government securities issued by the Central Bank of Nigeria and the Debt Management Office on behalf of the federal government. With this, you loan money to the federal government to finance various projects, and in return, you get some interest and your full money back at maturity. Now, because governments cannot come to us personally, they cannot come to me, Anne, or come to you. They will get this money from us through the help of an intermediary. Treasury bills are issued through competitive bidding, managed by CBN, with maturities ranging from 91 days, 182 days, or 364 days. Investors like me and you submit bids indicating the amount we want to invest and the discount rate we expect. These bids may or may not be accepted. When accepted, your interest will be paid upfront and then you get your total money at maturity. You can also choose to reinvest this profit that is paid upfront, as this will help you make even more money. Federal government savings bonds are issued by the Debt Management Office to finance various government projects and activities. It is designed to encourage small-scale investors to participate in government financing. With federal government savings bonds, you get interest 4 times a year, and at the end of the tenure you choose, whether 2 years or 3 years, you get your full money. So what are the benefits of investing in any of these two investments? 1, they are considered low to zero risk investments, backed by the full faith and credit of the federal government of Nigeria. So as long as Nigeria has assets, you have nothing to worry about because your money is safe. 2, you don't need millions to start. You can invest as low as 5,000 naira in federal government savings bonds and 100,000 naira in treasury bills. 3, your income is predictable and free from tax. In one of my previous videos, I mentioned that your earnings from treasury bills were free from tax, and some people commented telling me that this was not the case. Yes, government actually made a policy where the income from treasury bills were free from tax for 10 years, and that 10 years has now expired. But we still have many stockbrokers that are currently not charging this withholding tax on treasury bills. So depending on the stockbroker or bank you use to invest in treasury bills, your treasury bills income can actually be free from tax. That of federal government bonds is not opposed. It is completely free from tax. 4, an investment like treasury bills is very good for short-term investments. Say you need this money within the next 3 months or 6 months. You don't want to tie it down in longer investments. So treasury bills is going to be perfect for that short run. At the end of 91 days or at the end of 182 days, your money is free for you to do what you want to do with it. 5, the interest rate now on these two investments is very attractive. Just some months ago, you could get 10, 12%, but recently you could be getting from 17 to 20%. In case you would like to know how much you'll be making when you invest a particular amount at a particular interest rate, I'm going to be putting the link to a free calculator that you can use to find out how much you can make when you invest a particular amount. And if you still need more help with understanding this, then I'm glad to let you know that I have a free Telegram community where you can join us for free, and I can help you answer some of your questions. Join now when it is still free. I have a lot of plans for my community next year, so you want to join us now. The link to join is going to be in the description. The sixth advantage of any of these two investments is that they are acceptable as collateral when you want to take loans from the bank. You can also use them as proof of funds for your visa applications. The seventh advantage is that you can easily liquidate even before maturity. Yes, if you go for maybe a 1-year treasury bill or a 3-year federal government savings bond, and for any reason before the duration is over, you need your money back, then you can always sell off before maturity. You can comfortably do this because we have the primary market and the secondary market. Now, the primary offer is when you buy directly from the government, while the secondary market is you now buying from those that bought in the primary market, or selling because you bought. You can now sell it off in the secondary market before maturity. Another beautiful advantage of these investments is that you can use it to build your passive income. In one of my previous videos, I mentioned how you can use the federal government savings bond to earn interest every single month. This is how much you can be making 4 times a year if you invest 100,000 naira, 500,000 naira, or 1 million. Now that you know the advantages, let's look at the disadvantages. 1. Interest rates are usually fixed throughout the duration of the investments, and it doesn't really keep up with inflation. As with most investments, it is still better that your money earns a little rather than earning zero. The second disadvantage is that you may lose your bid for treasury bills, and losing this bid may come with a little cost. Yes, because the stockbroker that helped you to place the bid may issue some charges. But good news is that you can always access treasury bills from the secondary markets. Let's now move on to the differences between treasury bills and federal government savings bonds. The first difference between these two investments are their tenure. Treasury bills is usually for short term. You can get treasury bills for 91 days, for 182 days, or for 364 days. But for federal government savings bond, you can only get for 2 years and 3 years. So treasury bills are short term, while federal government savings bonds are for long term. The second difference is with how your returns are paid. While with treasury bills, you get your returns upfront. With federal government savings bonds, you get your interest payments 4 times in a year. The third difference is that with treasury bills, you need to go through a bidding process. So you place a bid, and the Central Bank of Nigeria will select the most competitive bids, and when they get the amount they're looking for, they are done. They close up. But with federal government savings bonds, as long as you apply during the days that it is open, you will get in. The fourth difference is with their minimum balance. With federal government savings bond, you can get started with as little as 5,000 naira, but with treasury bills, you can get started with 100,000 naira. In fact, we have some stockbrokers that don't accept anything less than 1 million naira for treasury bills. Another difference is that treasury bills are usually sold every 2 weeks on Wednesdays in the primary markets, while they are sold from Monday to Fridays from around 10 a.m. to 4 p.m. in the secondary markets. While federal government savings bonds are issued every month, usually within the first week of the month. Here is a step-by-step guide to get started with either the treasury bills or the federal government savings bonds. As we have earlier established, we need the help of a stockbroker. So the first step is choosing your stockbroker. I'm going to be dropping the link in the description to the SEC website, where you can see the list of all the government approved stockbrokers you can work with. I have personally worked with AfriInvest through their AfriInvestor 2.0 app, Stanbic IPTC through their website and their office. You can also work with FBN Quest, which is owned and managed by First Bank, or CSL Stockbrokers, which is owned and managed by FCMB. The second step is to create your account with your stockbroker. You will need to provide some necessary details like your BVN, your NIN, your ID, your utility bill, and a few other requirements. Some people have come to ask me, Anne, why are these people asking for all this information? You don't have anything to worry about. This is just part of financial regulations and a requirement by the government. Just like when you go to the bank and some of this information is required from you, all registered financial institutions have been mandated to get this information from their clients. After you provide this information, a CSCS number will be created for you. This CSCS number is like your account number in the investment world. The third thing you need to do is now to deposit the amount you want to invest into your account. You should note the minimum required for each investment. Then when the opportunity for the investment you want to go for comes out, simply follow the process provided by your stockbroker and apply. You are then good to go. Simply monitor your investments, and I will also advise that you reinvest your returns and also reinvest at maturity. Next, we'll be looking at the mistakes to avoid. 1. Not diversifying. Avoid putting all your investments into one type of investment. Don't say, oh, Anne has showed us that Treasury bills and federal government savings bonds are safe, thereby all my investments will be either in these two. No, I will advise you to have a beautiful mix and balance of different investments in your portfolio. If you would like to know other credible investments that you can diversify with, I'm going to put the link to the video you're going to watch after this one. The second mistake you need to avoid is mismanaging liquidity. Always set up your emergency fund before you start investing. For the benefit of those who may not know what an emergency fund is, an emergency fund is simply money you set aside for emergencies. This could be 3 to 6 months of your living expenses set aside in an account purely for emergencies like job loss or business downtime or health emergency, purely emergencies. It's good to set this up so that when you have an emergency, you won't rush to start liquidating your investments, because in as much as you can liquidate easily, some of these liquidations will come with you losing some of your returns. So it is not advisable. The third mistake that you need to avoid is using unverified platforms for your investments. And that is why I have put the link to that website where you can check and know all the licensed and regulated stockbrokers that you can work with. Another mistake to avoid is not seeking for help when you need it. Seeking for help will enable you avoid mistakes and shorten your learning journey. And that is why I'll be opening up a few slots for people to work with me on a one-on-one basis. Now, you can book a session with me where I will guide you through your income, on how you can increase your income, how you can save better, how you can invest better, craft out a wonderful investment plan for you to help you achieve your financial freedom goals. The clients I've worked with have had wonderful things to say about my session with them. Let me show you some of them. One of my wonderful clients said, "Amazing session with Anne. When we finished, I felt like I should pay her more. She's doing an amazing job. You need to book her to change your financial story." Another one said, "Exceptional experience. Mrs. Anne Enwere provided clear, insightful guidance and tailored her approach perfectly to my needs. Her expertise and patience made the learning process smooth and engaging. I now feel confident moving forward with my investment plans. Highly recommend her services to anyone looking to improve their financial situation." I'm not going to read out all the reviews I've gotten for you, but when you click the link to book a session with me, you're going to see some of other wonderful reviews. I only have a few slots open, so I'm going to be working on a first come, first served basis. Let's now move on to some frequently asked questions for these investments. 1. Can I lose money investing in Treasury bills or federal government savings bonds? No, you cannot lose money investing in any of these two investments because they are fully backed by the federal government of Nigeria. 2. Who can invest in any of these investments? Individuals and corporate establishments can invest. Even Nigerians abroad can also invest in any of these investments. And I've had some clients who felt that they were limited by not having BVN or not having their NIN. But good news, you can now do your BVN and your NIN online. Yes, you don't have to wait until you come back to Nigeria to get this done. So don't allow anything to limit you again. Another question is, how much can I start with? With federal government savings bonds, you can start with 5,000 naira, while with Treasury bills, you can start with 100,000 naira. Next question, are these better than fixed deposits? Yes. These two investments I've discussed in this video are better than fixed deposits in the sense that they give you more interest rates, and you can actually unlock passive income with an investment like federal government savings bonds where you earn interest 4 times in a year. Another question is, what is the difference between the primary market and the secondary market? In the primary market, you're buying or subscribing directly from the federal government, while in the secondary market, you're now buying and selling from and to other investors. Another difference between the primary market and the secondary market is that with treasury bills, in order to buy in the primary market, you need a minimum of 50 million. But not to worry, because with 100,000 naira, you can easily get these treasury bills through your stockbroker, who will now collate and bid in the primary market. Investments are simply how the rich keep getting richer. So I'll advise you to start small, learn and increase your investments as you grow more confident. Stay consistent to enjoy full long-term benefits. Book a one-on-one session with me and also join my free Telegram community so that I can help you make your investment journey smoother. I believe you now have a solid understanding of investing in treasury bills and federal government savings bonds. If you found this video helpful, don't forget to like it and share it with a friend that needs to get this information. Also, make sure to subscribe for more valuable money and investment videos like this. Do you have any questions or need personalized advice? Drop a comment below and I will attend to you. Watch this video next. And until I see you in my next video, keep dreaming big and keep working hard towards your dreams. Bye for now.